Hello and welcome to the first quarter 2025 investment update from the San Diego Foundation. I'm Matt Fettig, Chief Investment Officer. Of course, the first quarter was really trumped, if you will, by things that happened towards the very last week and into April. Trump's Liberation Day, the day in which tariffs were announced, caused quite an effect on the market. And I'd say the word of the quarter and into April was uncertainty. And as you know, markets highly discount uncertainty. Markets are not fond of uncertainty. And as a result, we had a big sell-off in the stock market. Later in April, we also had a sell-off in the bond market at the same time, which is a fairly rare occurrence. All said and done, however, when you look at results for the first quarter, they were largely muted, somewhat flat. So let's start first talking about our endowment portfolio. The endowment portfolio was down about 0.5% for the first quarter, and it was really driven by our exposure to various parts of the stock market. Our international stock managers did particularly poorly during the first quarter, and that resulted in the majority of the underperformance relative to our policy index or the benchmark. You can see over 3, 5, 7, and 10-year periods, we're handily beating that policy index. During the quarter, real estate was also a detractor. Now, we've had great positioning in real estate, despite the fact that areas like office continue to offer a great deal of uncertainty. Other areas, fixed income was relatively flat, private credit was a strong contributor, and private equity was a modest contributor to performance. For the first quarter, the long-term portfolio was up very modestly. We can call it flat. Also, some detraction from our international stock managers. There were a few large names within the index that did particularly poorly during the first quarter. Unfortunately, most of our managers owned those positions in greater weight than the index, and the result was some underperformance. We had strong performance out of our fixed income sector, and our hedge funds were a modest contributor as well. The medium-term portfolio was up 1.3% for the quarter. Remember, this portfolio has far less exposure to the stock market at 23.9% here at the end of the first quarter. As a result, the portfolio was able to produce a positive rate of return. Over longer periods of time, the 5-year, the 7-year, and the 10-year, some modest outperformance relative to our benchmark. And following suit, the intermediate term portfolio, which consists 100% of bonds or fixed income, produced a 2.4% positive result for the quarter, up 5.6 year over year and 2.4% over 3 years. Remember, this is a newer portfolio for us, and hence it only has 3 years worth of history. The short-term portfolio produced a 1.1% rate of return for the quarter. This portfolio consists 100% of money market. Remember, that correlates strongly to short-term interest rates. And while short-term interest rates are off their highs, they still remain elevated, particularly against the better part of the last 15 years when short-term rates were zero. And finally, the sustainable portfolios, the sustainable endowment down 2.1% for the quarter, the sustainable non-endowment down 2.2% for the quarter. These portfolios are positioned similarly, if not almost identical. Cash flows are the only reason why these portfolios would be modestly different. We have a fairly substantial weight to global equities in this portfolio at 74.1% and 73.9% for the endowment. That's really what accounted for the negative performance here as stock markets, particularly in the US, were down. Importantly, I do want to recognize that while the first quarter in April felt terrible, there was a lot of uncertainty in the markets. Markets at this point have rebounded and are now flat to slightly positive in many cases. So while it felt bad, we have had a strong rebound in markets. Thanks for joining today. If you have any additional questions please go to sdfoundation.org. Thanks.